Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So firstly, we have seen gold gain yet again. It's the 6th consecutive weeks here of gains on gold, where gold is now up 19% so far in 2020, and with that we have also seen a strong push higher yet again on Friday into the close on both platinum up 2% and also silver, which is up 6% so far in July, but incredibly up 60% since March of 2020. And as we mentioned to you many times before, if you're not making money in these market conditions right now, you absolutely should be. There's been more great opportunities last week that we identified with you, particularly on platinum, and not FOMOing into gold, but buying those dips that we saw yet again last week on the European Central Bank announcement. So well done to everybody who did that, who capitalized on the sell-offs in order to buy back lower, because that's worked great again for both gold, silver, and also platinum. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into next week. So first of all, if we have a look at platinum, in fact here, which closed at $849 per ounce on Friday, we were in and out of platinum twice last week. On Thursday on the European Central Bank announcement for 150 points, and again on Friday for 180 points. And we also maintain a position here on both gold and platinum going into next week, both of which are in profit. So again, if you capitalized on those sell-offs last week in order to buy back on the dips, well done, because you don't want to be FOMOing into precious metals at the moment. So let me just bring you back to gold and the point that we mentioned last week. You can see here, every time that we're seeing gold come back up towards the weekly highs, it is finding pressure. It's so far been unable to break above approximately $1,813 per ounce in the latest week. And all we're really doing here is ricocheting between support and resistance. So this is frustrating for traders who are buying in too high. They're getting trapped by getting in too high on gold. And also sellers here are starting to look for sell short opportunities on a breakdown in price below 1800s. They then get trapped, the retail traders who are trading on outdated technical strategies, which would essentially signify to sell gold if it broke below 1800, and all we're doing is seeing retraces back towards 1790, back towards 1795. Those get a bid, and then we see gold in no time up 0.5% or 1% in the day. Now, the good news is that we've been consolidating now for a week and a half, so we're bound to get a resolution now. And we also did see the eagerly anticipated sell-off on the European Central Bank announcement, which again is a reason you don't want to FOMO in, because then you have to withstand a 200-point sell-off in your direction and you get chopped up if you've done so. But then you wait patiently for the dip, as we've done so, and then we've capitalized on the breakout here on Friday, banking more profits on gold before the close and then keeping a position on it going into next week. I would pay a lot of attention right now to gold on the higher time frame. So if we go over to the monthly here, this is where things get very interesting indeed, because we are actually now starting to clear above the 2011 highs here. So you can see previously where the 1800 level was a major magnetic zone of resistance. On 4 separate occasions in 2011, we saw failed attempts to break above the 1800 level barrier, and with that we've seen sell-offs, but we're not seeing that at the moment. In fact, gold is slowly but steadily creeping higher here. It's consolidating, but it's not giving up the gains, and it's now had 6 consecutive weeks of upside here. If we continue to slowly but surely see this push higher, this is where gold can then break out to 1820. If we can close above 1820, which is actually the highest close that we had going back to 2011 as well, back in September, then this is where it will be the highest level that we've ever closed for gold. Of course, we have seen spike highs before, but we've never closed above that 1900 level, for example. We've only spiked up to that zone and then sold off. So this will be an important week going into the next couple of weeks of July here. Then if we take it out to the weekly chart to observe the price action, you will see where we're right back at the upper end of the channel here, but we have an inside candle on the weekly that if we were to break above the weekly highs here, this could of course set up for a big move to the upside. Now, what is very clear right now is that only shallow retracements are happening at the moment on gold. So we're seeing retest back towards 1800 to 1790, which are very quickly being bid up right now. If we were to break and close below that level, there is a pocket of clean air for a sell-off and retest the swing lows here going back towards the end of June. But so far, we're not seeing that price action. And the fact that we've consolidated for so long here on gold does suggest if we can build up some momentum, break above the weekly highs here, we may even do this on the Sunday open, then this is where we can really start to make a move up towards that 9-year level. Okay, so this is where we can break above all of the recent consolidation and then start making the next up leg here for gold. Now, it's worthwhile noting that the gold to platinum ratio, or I should say the platinum to gold ratio, is the lowest it has ever been. So relative to gold prices, platinum is the cheapest it has ever been here, and we've continued to see support coming in between $800 up to $830 per ounce. It's providing some fantastic opportunities to buy here on the lows. We were in and out this trade on both Thursday and Friday, so in total we caught over 300 points there on that price action with platinum, and we continue to hold a position going into next week, which is currently up 180 points here on platinum. So what I'm looking for is whether we can build some momentum above $850 per ounce next week on platinum. You have a bull flag formation as well on the daily here. If we can then break above the weekly highs here, start making a move back towards the previous highs at 890 to 1900, that offers a great risk reward back towards those recent swing highs where you could be on for approximately 500 points or more if we can get that additional follow through to the upside on platinum. Now, we have protected both of those trades going into next week, so it's absolutely risk free. And what we'll be doing there, if we were to see a rotation lower, and let's say for example we don't see additional momentum to the upside, I would look for more support back towards the recent lows here, back towards that 830 down towards the 800 level have been great areas of liquidity to build additional positions in this market right now. So I would definitely have that on the radar. Then moving over to silver. So if you have a look at silver here on the weekly chart, you can see now we've actually cleared above and had the highest close here since 2016. So it's the highest close in 4 years here for silver, where we penetrated above the $19 handle. We're now trading into the close at $19.30 per ounce. We've now come back all the way back towards the August 2019 highs here as well. So we're effectively trading at 11-month highs at the moment. And of course, we've had a complete V-shaped reversal pattern from the time when we saw the gold-silver ratio hit 125 to 1 back in March, which was the highest the gold-silver ratio had ever been. Silver prices broke down to $11.50 per ounce. Since then, we've seen over a 60% recovery for silver prices. Many of you who follow our analysis on silver alongside the commodity report, also silver asset of the day, have capitalized on these moves and trade setups that we identified with you going back to March, April and May. For these breakouts, you've been able to benefit on that tremendous upside with silver. We talked about it before, that this is a sleeping giant ready to catch up to the price action with gold, that typically it can take up to 6 months for the price, if it's been suppressed with silver, to catch up to breakouts that we see on gold. And let's just move over to the energies here as well. We continue to see very tight price action here on the energy market. So I'm looking at US oil. You will see where oil keeps getting very key support around $38 per barrel, but also resistance at 41. So we're ricocheting between these tight levels at the moment. So it's moving within approximately a $3 range. There needs to be a resolution here. You do have higher lows in the chart, but also you've got an overhead neckline that so far oil has not been able to break above. If we can break above that level, which happens also to be the level that was broken down from during the price wars at the beginning of March, this is where you could have quite a big move, considering there's been so much pressure here on oil. But what you do need is a catalyst for that. I would be looking at the API data next week. I would also be looking at Wednesday's crude oil inventory data as well. And do make sure you have the FOMC statement in your diary, which is going to be on Wednesday, the 29th of July. That will be a major mover for gold, silver, for platinum, for crude oil as well. That's the FOMC statement at the end of this month. Traditionally, that can be a really big catalyst for all of the markets that we trade. For commodities, that will of course also affect the US dollar, stock markets, and is a tremendous trade opportunity. Very much like you saw big moves also on the European Central Bank announcement that we had just on Thursday, which provided some great opportunities, in fact, to buy on the dips, which I'm glad many of you capitalized on with gold and platinum and silver. This sort of price action is very common to get big volatility on FOMC statements. And of course, if you would like to learn a research-driven approach to the markets, where perhaps you're just fed up of your capital sitting in the bank, where it's now earning near enough 0% interest, if that, you may actually be now starting to move to negative interest rates depending on where you reside in the world. You want to make your capital work for you. We've still got 6 months left of the year. As I just mentioned, we've already seen tremendous opportunities over the last few months. Look at silver. It's a trade opportunity we've been discussing with you time and time again on the commodity reports. It's now up 60% since March. We have gold right now trading at 9-year highs. Platinum right now, the platinum to gold ratio is the lowest level it has ever been. There are just some some really great opportunities that you don't want to miss in the next few months, opportunities for you to compound your account, to grow your wealth, where you're in control of your finances and you're not letting someone else manage that, and you're also not just letting the capital depreciate sitting in a bank account which is really providing you with no level of decent interest. Also, on top of that, many strategies and technicals that may have worked back a few years ago or even back in 2019, they're not going to work these days in the current trading environment. We hear it time and time again that retail traders, they're getting chopped up a lot. Technical strategies are just not working for them. Their indicators are not working. They're either taking a break from trading or they're just getting chopped up all of the time. And this is where it's really important to get an edge in the market, where you need more than just technical analysis. You need to be trading the same way as a hedge fund and institution. You need to be looking at the same data that they are in order to build your framework and positions in the market, looking at market intelligence, cycles in the market, the way that the funds are positioning themselves, and then taking advantage of that data, of the macroeconomics, of what we're seeing from the Federal Reserve, of central bank policies, utilize that information and data alongside our in-house market intelligence. That is what will give you an edge in the markets, and you'll be able to really capitalize on what we're going to see happen over the next 6 months here between now and the end of the year. So if you would like to find out more, learn a research-driven approach to the market, and join a community of successful traders, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You also have access to our real-time trade alerts, trading research and market insights, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below today's report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.